Hello and welcome to Asking for a Trend. I'm Josh Lipton, and for the next half hour, we are breaking down the trends of today that'll move stocks tomorrow. There is a lot to keep track of, so we are focusing on what you need to know to get ahead of the curve. Here are some of the trends we're going to be diving into. Stocks rallying today, the first trading day of the week after a long holiday weekend. That pop came after President Trump said he would push back the 50% levy deadline on the EU. All major indices ending up. Optimism for Okta, the San Francisco-based company, reporting earnings today, and we have all the info you need to know about the future of the cybersecurity firm. And we're looking at Nvidia's impressive milestones as investors prepare for the AI chipmakers earnings report tomorrow. In focus is our chart special of the day. Well, Nvidia will report its first quarter results after the bell on Wednesday in the most anticipated earnings announcement of the season. For more on what to expect from the chip giant, let's welcome in now Patrick Moorhead, More Insight Strategy founder, CEO, and chief analyst. Patrick, it is good to see you as always. So got a lot of tech news to go through, Patrick, and you are just the man to run through it all. Let's start with Nvidia. Could be, Patrick, the most important data point of the week for investors. That earnings report, when you read through the analyst previews, Patrick, what some at least seem to say is, listen, this should be kind of a noisy print. You got the H20 ban, the macroeconomic uncertainty. But I'm curious, what do you expect, Patrick, to hear from Jensen Huang tomorrow?
Yeah, so Nvidia has had a double beat for the last 7 quarters, and I don't see any reason why that won't be the case here. Now, those double beats have narrowed, and eventually they're not going to hit it, but I don't think this is going to be the quarter. There's a lot of noise going on, but really only 2 matter. The first one is the potential China risk. I do believe that we will ultimately see a B20 or a Blackwell tuned down card for the Chinese market. But there's also upsides. I want to hear what the Middle East announcements actually mean and when they're going to start to hit. Nvidia was relatively mum on the details about this, but I think Nvidia has to talk through that. CapEx, right? We saw all the Mag 7 deliver CapEx forecasts that were in line with their annual guidance, so nothing has changed there. I think the only other thing to do the double click on would be gross margins. I do believe that Nvidia has been expediting materials. They've been expediting enclosures, pretty much everything to put together Blackwell. So we'll likely see some pressure, but I don't think nearly as much pressure on the gross margin side as we've seen for the last couple of quarters.
And you mentioned what's going on in the Middle East, Patrick, and I'm curious, the deals, the business Jensen Huang is generating over there, how much can that offset what's going on in China?
It can offset it up to about 30% if China went to absolutely zero for Nvidia. So it's not a net push. The other thing we don't know either is what could those H20s that have been stranded, could they be reworked? We'll probably see the big write-off of those, but that doesn't necessarily mean that all the parts that were work in progress can't be repurposed into some inference type of chip here for the United States.
If I'm an Nvidia investor and I'm listening to this, Patrick, there are some bulls on the street I know who actually get more excited about the second half. And I'm curious what you think about that. And among the reasons for the excitement, they talk about it, as you suggested there, maybe this China compliant chip. They talk about, hey, listen, the cloud giants, we heard they're going to keep spending, and the business with Saudi Arabia and the UAE. Am I missing anything, Patrick?
No, I think Nvidia has been back-end loaded for a while, and that's when Blackwell hits, which does a lot more tokens per dollar per second. And a lot of the hyperscalers are actually waiting for Blackwell. I do think that they didn't buy as many H series as they could have because the economics are so good for them. I also like the move where Nvidia de-risked Blackwell a bit by pulling back on an aggressive chassis design, where you can actually use a lot of the same components for the Blackwell 200 as you did for the Blackwell 300. So second half is going to be big. The CapEx forecasts indicate that. and Nvidia appears to have everything in line. Looks like a little bit less risk than the first half.
I want to switch gears, Patrick, get your thoughts on another tech story, which was Salesforce acquiring
Yeah.
Informatica for $8 billion. Here was the skeptical take I saw from RBC's Rishi Jaluria. Rishi telling his clients, while on paper the deal can make sense, integrating MuleSoft, Tableau, and Data Cloud, and using that combination to power Agentforce, given the lack of integration of Salesforce assets, we question this vision, he says. Furthermore, even if this logic makes sense, we wonder if there's any major advantage to buying Informatica versus partnering. What's your response to that, Patrick?
So I do like the thesis here. With all the CIOs that I meet with, one of their top 5 impediments from rolling out and scaling generative AI is the lack of a coherent data management strategy and the tools to be able to pull all that data. In the Gen AI world, you're going from east and you're going from west, as opposed to the ML world, which was north and south. And what that means is instead of just, let's say, activating CRM data, you're connecting CRM with ERP to SCM to all these other data sets. And that's why this makes sense to me. It also is parallel to the big growth in data cloud that we've seen with Salesforce. We've seen this massive growth with even companies like SAP, right? The precursor to big Gen AI action is getting your data in line. I do think the comment is fair about a lack of integration, but I expect that integration to happen and needs to happen at a very quick pace. Complexity is another one of those top issues. And if Salesforce can reduce some of that complexity, reduce some of those steps, reduce some of those operational challenges, I think they have something here.
Do you think, Patrick, if I'm a Salesforce investor, should I be thinking, okay, maybe Mark Benioff is returning to that pattern of large M&A after a hiatus here? Or no, the regulatory backdrop is not going to allow that?
No, I would expect more M&A, particularly if we see tepid growth. I don't think he acquired Informatica necessarily for the revenue, but the potential for future revenue and integration. But mark my words, if the growth does not come organically, we are going to see some increased M&A action here. I was surprised that the company didn't make a play for Cloudera. It seems like they would have been more expensive. They're a private company right now, but I do think it would have been a better fit for them.
Finally, Patrick, I want to get your take on all things Apple. You know, the stock did end today higher, but we know the company's dealing with a range of different issues. Trump and tariffs and trade, supply chain questions, the China business. Curious to just get your thoughts on Apple, where that stock is right now, where you see it headed.
Yeah, so let me first talk about the manufacturing iPhones United States. I've heard can't manufacture here for 35 years. 30 years ago, it was, hey, we can't do this in Taiwan or we can't do this in China. 8 years ago, Cook said only China could build iPhones, and now we're suddenly doing this in India. Remember, 5 years ago, TSMC pundits were saying, hey, TSMC can't make chips competitive in the US. And here we are, Arizona, with 1 mega fab on the docket and 3 more to go. Now, there are 4 realities, Josh, behind this. First of all, the US doesn't have a large enough labor pool to hit the scale required. Second of all, we would need more skilled manufacturing laborers and engineers to make this a reality. Third, we would likely need to have more automated manufacturing. And fourth, designs would likely have to be changed to meet that automation. Probably take 5 years to get this in line. The ecosystem would be a challenge. I think a more likely place, Josh, to do iPhone manufacturing would be Mexico, right? And where all of Apple, well, a lot of Taiwanese and Chinese ODMs are already set up doing servers and desktops. Now, servers and desktops aren't like an iPhone, but I believe that they could figure it out and takes away any of the cost issues related that I've seen the quote unquote experts talk about.
But let me ask you this, Patrick. How do you think President Trump reacts if he hears more manufacturers coming to Mexico? Because it seems like, listen, he wants that here. He wants that in Ohio.
Yeah, he won't be happy, but I think it's where we're going to end up. I think Cook is very smart, and so is Apple. And I think what they should do is immediately make a commitment to a manufacturing engineering site with the goal of being able to design and manufacture a certain amount of iPhones here in the United States, to give it that college try, Josh, as opposed to instantly, saying no, which I think was a strategic mistake to do with Trump. And I had posted many times, the administration sees right through this. Let's move this to India and everybody will be happy. That's missing the point, I think.
Patrick, always good to see you, my friend. Thanks for joining us.
Thanks, Josh.
Well, investors have enjoyed Nvidia's meteoric rise. The stock is up a whopping 40% over the past year, and we're taking a by-the-numbers look on Nvidia's impressive track record.
This is Yahoo Finance. I'm executive editor Brian Sozzi and also the host of the Opening Bid podcast. Arguably the most important Magnificent Seven member, you guessed it, folks. Nvidia reports earnings this week, and the usual hype is very hard to miss. Stock is up a sizzling 40% over the past year, but down this year due to concerns on AI demand and China chip export controls. But analysts are staying overwhelmingly bullish on one of their favorite stocks. 87% have a buy rating according to analyst recommendation data found on Yahoo Finance, and the average price target is around $162, implying major 25% upside from current price levels. But with the stock trading at a pricey 31 times forward earnings and up more than 700% over the past 3 years, pros I chat up on Wall Street are beginning to ask a key question. How much of Nvidia's AI dominance is already priced in? So let's quickly look at Nvidia's headwinds, which the bulls often seem to forget about. We'll start with geopolitics. U.S. export restrictions have cut Nvidia's China market share in half. Nvidia founder and CEO Jensen Huang says the company has already walked away from $15 billion in China sales and written off a staggering $5.5 billion in inventory tied to its banned H20 AI chips. Plus, the competitive landscape is shifting. Cloud giants like Amazon, Microsoft, and Google, Nvidia's top customers, are racing to build their own AI chips. And Chinese firms like Huawei are also quickly closing the gap. There are also upstarts like Grok that have raised large slugs of money to take on Nvidia in all things AI chips. Meanwhile, investors are more closely scrutinizing Nvidia's profit margins. Despite continued robust demand for Nvidia's Blackwell AI chips, the company's gross profit margins are compressing, pressured by rising data center costs and complex new hardware. Some investors are hedging, including Michael Burry of The Big Short fame. He recently bought put options on Nvidia, betting that chipmakers' rally is running out of bandwidth. AI might be the future, but Nvidia's valuation may already be there. This week, we'll find out if their results were worth the usual hype.
U.S. stocks surging, posting a comeback from Friday's losses. The move higher comes amid improved prospects for a U.S.-EU trade agreement. Yahoo Finance's Jared Blickery joining us now with trading day takeaways.
Thank you, Josh. With another trading day detente, we got a risk-on market. That has been the theme of the day. And I'm not going to spend a lot of time on this. Just want to show you the smattering of markets that just did really well today. Most of these markets having their best day in at least 2 weeks. ARK Innovation Fund, #1. So a lot of those smaller issues, although Tesla, one of the Mag 7, is front and center there. And then speaking of Tesla, the Mag 7 ETF, MAGs. Then we got SOX, that's chip stocks. Then we got New York FANG. Then small caps, then defense and aerospace, then regional banks, the Qs. You get the picture here, even retail up over 2%. So a broad swath of equities doing pretty well today. And I had the chance to talk to, and this is on the back of the 30-year falling back below 5% today. And I think that was a key development, because anytime the 30-year has punched north of 5% or threatened that, we've had some problems. And I did have the chance to talk to John Haar last week on Stocks in Translation about, the bond market and how it's kind of acting differently over the last few years than the prior 40. Here's what he had to say.
After that 2022 bond bear market, 2023 was not a particularly good year for bonds either. A lot of them were calling for things to reverse in 2024. And that is a common strategy. You just say, hey, look,
Mean reversion.
Mean
Everybody
reversion.
loves it.
Everyone loves mean reversion. It works well sometimes. It did not work well in 2024. 2024 was not a good year for bonds.
So I think the bottom line for investors here, we got a new playbook that we got to realize, and structurally higher rates are probably going to be a part of it. And we got to watch a 30-year. We got a bunch of auctions this week. We had the 2 today, we got the 5 and the 7 coming up Wednesday, Thursday.
Back to that risk on thesis,
Yeah.
the bullishness we saw today, pretty broad-based, correct?
You know, that was the case, and I was looking at the Dow market. So if you take a look at the Dow Industrials and the Dow Transports, and on the Yahoo Finance site, that is caret DJI and caret DJT. You got to put the caret there because that's not Donald J. Trump. The Dow Transports have been around since 1886. This is a year-to-date chart, and look, the Dow, by the way, almost positive on the year. You can see still just slightly underwater, but here are the transports, down 6.7%. But I'm going to put this chart on a basis from the April 8th low, and so that's from the bottom. You can see the transports have been outperforming here. I'm going to give you a really quick look at today's heat map in terms of the Dow Industrials. Here's what they did. Ta-da! Just a few blights, Boeing and United Health, nothing new there. And then here are the transports, everything in the green, led by Uber, the biggest one in terms of market cap. United Airlines, one of the point winners, up almost 5%.
The dollar up today. What was behind that?
Yeah, really interesting. I think the European trade detente, at least postponement of any additional tariffs, that had a big deal with the dollar being up today. And this is a respite. And part of my concern has been that the world has been saying sell dollars at any cost, get rid of all U.S. assets. But that was the story a month ago, 2 months ago. That has not been the story recently with this huge run up since April 8th. But with the dollar up today, guess what that weighs on? And that's going to be commodities. So I'm going to show you real quickly what's been happening in commodity land today. You know, gold, we were talking about that several days last week, but it was one of the leaders to the downside today. Here, I'm just going to tap that. GC equals F down almost 2%. So we haven't seen a big decline in gold in a while. But here's the year-to-date chart. This still looks pretty bullish to me. I thought this was an M-top. No, we've just got a bull flag right here, and we're just kind of zigzagging down. Need to find a catalyst to see if we can move up again. 3,500 is a big round number there. But today, the stories in commodities is, for the most part, they were sold.
Should we do a final peek at Bitcoin?
Yes, sir. Let's just do that real quick, because 110,000 has been a kind of a sticking point. And if you look at the 5-day, you can see the record highs from 111, 112,000 last week. But we are right there. Here's the year to date, and I'll show you how bullish this chart looks after having eclipsed these highs from earlier in the year. So we'll see. Can Bitcoin finally lead equities to new highs as well? Stay tuned.
Stay tuned. Thank you, buddy. Appreciate it. Stick around. Much more asking for a trend. That's still to come. Well, Nvidia has been a critical component of the S&P 500, and with earnings on deck tomorrow, we're taking a look at just how important it has been over the last few years. Yahoo Finance's Josh Schaefer joins us now with a closer look in our chart of the day.
Nvidia's had a growing impact on the S&P 500 and the S&P 500 gains. So we posed that question earlier today to Dave Mazza, the CEO over at Roundhill Investments, to ask him just how much this round of Nvidia earnings is going to matter for the S&P 500. I want to take a look at what he had to say.
We know Nvidia, due to its size and scale and the broader markets and major indices and ETFs, what have you, is incredibly important. But it's incredibly important not just because its impact, its revenue and earnings has on broader indices, but actually it's sort of tip of the spear for this whole AI revolution.
So Mazza mentioning how important Nvidia has been, calling it the tip of the spear for the AI revolution. But in our chart of the day, what we're looking at here is simply how much Nvidia itself, that one stock, has meant for S&P 500 gains. We're looking at gains in the S&P 500 since November 30th, 2022. That was when ChatGPT launched and the overall kickoff of that AI boom. You can see here, Nvidia has accounted for 17.21% of the S&P 500's total gains over that time period. That means that the 499 companies in the S&P index, the other 499, have accounted for just 82.8. So essentially saying that Nvidia itself was worth almost a fifth of the S&P 500 gains in that 2.5-year period.
That is why, heading into earnings, Nvidia's earnings Wednesday after the bell, people care so much about what this company has to say and how the stock moves. It's one of the largest holdings in the S&P 500. How Nvidia moves after earnings could matter for the S&P 500 overall and the other companies within that index and sort of that momentum AI trade.
Let's take a quick look now at what's trending here after hours. Okta shares, they are under pressure despite top and first quarter earnings and revenue estimates. Company, however, reiterating its full year revenue outlook. Okta says it is factoring in potential risks related to the uncertain economic environment. And shares of Box, they're jumping after reporting an earnings beat for the first quarter. Box delivering double-digit growth in both billings and short-term remaining performance obligations. Looking ahead, the software company is lifting its full year outlook as well as providing a better than expected second quarter forecast. And Motorola Solutions announcing it will acquire Solus Technologies for $4.4 billion in upfront consideration. The deal is comprised of about $4.38 billion in cash and $20 million in restricted stock. The company looking at purchasing Solus as part of its plans to expand its intelligent network footprint and powering next generation security. Well, that's a wrap on today's Ask for a Trend. Be sure to come back tomorrow at 4:30 p.m. Eastern for all of the latest market-moving stories affecting your wallet. Have a great night.